What is your approach and what have you found to work really well?
Yeah, so I think a lot of the content is BS on LinkedIn right now. Like a lot of it is ChatGPT content. They have VAs or some kind of automation replying to them, and it looks horrible, right? Like I go on there, and I've actually taken a few week break from it recently, as it just pissed me off. Like it's gone from just really high quality content to just BS fluff marketing with a lot of pods, right? So I think if you're focusing on that side of it, yes, your engagement may be higher, but it's likely from people like us in the conversation where Tim, you're great, but you commenting on my post or me commenting on your post isn't going to help us at all either way. If you have all these operators and allocators that are commenting on your own posts, you want people who are actually in your demographic engaging with you. So for me, like I found much more success on this side of the house as it relates to cold outbound. But I think the posting piece can go help those people hear how you think and operate more frequently. Because if you're using the cold outreach to connect with people and they're seeing your content, it allows them to go start understanding who you are, how you function, how you operate. But I think what a lot of people are doing now is these like pods or AI to go comment on them. And if it just looks like ChatGPT, it's not beneficial at all, in my opinion.
Gotcha. Let me explain that to others because a lot of people don't realize what's happening. And I agree with you. I see so much of it now because I study a lot of influencers, especially in our industry. And you go to their post, you look at the comment, at least 99, at least
It's
90%
bad.
of it, very bad. Like they're all chat GPT type of comments. And yeah, and so what Sam is talking about is on the content side, you still want to make really good content posts because that's your credibility kit. And that's how your resume, your credibility, your public resume that everyone can see and how they can quickly build their know and trust with you. So that way, when you do connect with them and DMing them, and they go to your profile to date you, to check out what your profile looks like, that's how you win them over. And that's what Sam is talking about now. Yeah, no, that's really good.
It's gotten bad recently. Like I feel like the last few months it's gotten worse and the ChatGPT has kind of
Yeah.
picked up, but there's still a lot of gold on there. There's still a lot of value on there, but it definitely is harder to go cut through the noise as there's just more noise out there, right? So I think all those things are really crucial. But yeah, I love LinkedIn when you use it the right way. And the biggest value it has is that you can be really specific with who it is you want to go target. So for example, I can go build a list tomorrow of people who are in sales in the US, been in their company for a period of time, right? Maybe they just change jobs. So you can go trigger those, hey, they have retirement money available. So I think all those things are super valuable. You can be really specific in criteria of lists you want to build. Just make sure you're not falling into the trap of just, I'm going to push out a lot of this fluff content and think that this is move the needle for me in a big way. Well, less content that, in my opinion, is higher quality content is way better.
Yeah, I agree. A lot of times people think that the algorithm works on that consistency schedule. If you post every day or every other day or whatever that is, the truth is the algorithm works much more on how many people are genuinely engaged in your content. Even if you only post once a month, but your content is so good that a lot of people are commenting and interacting with it, the algorithm will reward you much better than making boring posts every day that people are not interacting with. Go ahead, Sam.
Yeah, and I was gonna say too, make sure you're creating content that actually targets the end user that you want to target. We're looking to go raise money, and my posts are attracting Tim and Mark. Not so great a value because Tim and Mark are likely doing their own deals and putting their own money into their own deals. We're gonna go target people who actually fit that criteria of who our end target investor is and go speak to them. Don't go speak to other syndicators and operators. Speak to who your actual end avatar is, whoever that person may be.
Yeah, that's really good. One of the strategies that been taught a lot lately on LinkedIn is to spend 30 minutes or so before you make your post on commenting on other people's posts. And then after you make your post, spend another 30 minutes getting that comment going. Do you do something similar to that at all before you post and after?
Yeah, I have a VA do some of it, which probably contributes to the problem as well. But there's still just a lot of, if you got to think about it, platforms want to reward you for spending time on there. And if they feel like it's doing that, I think things should change where they don't reward you for doing that as much just because it's creating a lot of artificial content. But yeah.
Yeah, okay. And then for your outbound, you mentioned that, You use LinkedIn to find very specifically who you're going after. What's your process of going about finding that? So in your case, tech sales professionals, what's your process to go and identify those people and reach out to them?
Yeah, so Sales Nav is the best $100 a month you can go spend, right? What it allows you to go do is have a list of 50 or 100 filters that you can go play with. And in turn, what you want to go do is dial in who your persona is. For example, on my end, right? I primarily target people who have been in their career for 7+ years or 9+ years, whatever that filter is, based in the United States. They're in a sales function. They're in a director, VP, or C-level type role, meaning that they likely make enough money to actually allocate capital. And for them, it's just easy to go down a list of saying connect with people every single day that fit that profile. And in turn, try and go write copy or articles or content that I can go share with them like specifically. Saying, hey, Tim, notice you're also in sales, right? Wrote this article on why people in sales leadership are passively investing in these types of deals. Here's why. Go check out points 3 and points 4, maybe really relevant to you. So what it allows you to go
Mm,
do is create really relevant content for that person. So it shows that you're meant for just them, right? I think at times people want to go too wide in the content they create where they feel as though, hey, if I'm not speaking to everyone, I'm losing this field. And what I'll tell you is that I've raised 9 figures of capital with 300 or so investors, right? And people may feel like they need to have 1,000 investors. You really don't, right? You need a few hundred really good ones, and you're usually in a pretty good spot to turn it into a full business. So what I tell you is the more niche you go, the better. And for context, if you look at sales leadership executives in tech and software that hit those criteria, there's 400,000 of them in the United States. Like you can build a massive business. All of us on this group can build a massive business from just those people, right, in the platform itself. So what I'll tell you is go niche. There's more than you think, and there's more than you actually need to.
right. Ooh, I love that. Makes a lot of sense. One of the posts that I posted, in my case, I post on Facebook, but I'm gonna go post on LinkedIn now because it worked really well on Facebook. My partner Jennifer here, she's a CPA, and so when we were writing our book on how to pay zero taxes investing in real estate, when this was just an ebook, or even before it was an ebook, I made a post on Facebook. Yeah, that Jennifer was creating this cheat sheet on how to pay zero taxes investing in real estate. And we got over 100 leads from that. And so it makes a lot
There
of
you go.
sense to, yeah, it makes a lot of sense to not only use it as a lead gen, but using it the way that you're using it to say, hey, I wrote this article. Here it is, completely free value to you. You don't need to opt in. You don't need to do anything. Just go check it out. It'll add value to you as the first connection. So that's really cool. Do you put that along with that link in that connection request itself?
No, so we'll always just kind of connect with people, right? Like very simple, very soft ask on the connection request, and then usually as a follow-up, we'll go push it
Okay.
out.
Yeah. So do you say anything like when you say a soft ask in the connection request, do you say anything at all as a way to relate with them?
Yeah, okay, looking to connect with other sales leaders in tech, right? Or like sometimes no connection, like connection requests. We tested a lot of it, and honestly, the rates of replies or opens or kind of acceptance doesn't really shift a lot.
Okay. Gotcha. Good to know. All right. So first you send them connection requests, looking to connect with other sales professionals. Then you follow up with an article. And then how do you lead them into the conversation of, hey, let's book a call, whatever that next step is to strengthen that relationship?
Yeah, so I'd say it depends. I think a nice thing of that once they accept your request, they're following you, right? So all of your posting, they start seeing it then, which becomes hugely helpful. But I'd say sharing articles, making soft asks, right? Seeing their level of engagement. And you kind of give people an opt out too. Okay, have you ever thought about like investing like this? Do you like how do you currently allocate your money or what types of deals do you invest into? People are usually pretty open-minded to go talk to it. The nice thing that's been is like we're targeting people who have similar backgrounds and experiences to myself, which is helpful.
Yeah, that's always important for sure. It's so much easier to connect with. For me, I'm a business owner. I've been a business owner for 23 years now. I'm Vietnamese. So anything along business owners, investing, Vietnamese, Asian, like any of that, so those
Yeah,
type of
yeah,
people,
yeah,
I'm able to connect a lot easier. A
for
lot,
sure.
yep. Very cool. All right. And yeah, to raise 100 million is like no joke, right? That's really impressive. What would you say? How much of it would you say LinkedIn accounted for, and then referral accounted for, and then other things?
LinkedIn a lot. I'd say if you look at where a lot of the capital started, I'd say well over 3/4 of it from LinkedIn, if not more, including
Wow.
referrals, people from there. Because what you'll find too is you'll find certain people who become a massive referral for you, right? Things went well, they refer their friends, they refer their friends, right? It's probably 3/4 or so from LinkedIn, including referrals on there. And then we've definitely raised some capital in a fund to fund structure too, right? From deals that I've operated myself. So I'd say it really depends, but I'd say the bulk of it's been from LinkedIn or like a LinkedIn referral.
Very impressive. Okay. Let's talk about the different types of assets you have done because you've grown a lot, right? You started investing in multifamily and self-storage and stuff like that. And then you expand into your short-term rentals and paving companies. And now, yeah, you have
Yeah,
expanded a
so
lot.
it's
So walk us through like that whole growth process that you went through in terms of expanding your investment assets.
yeah, so I started like most people, right, in multifamily, where that is just the most easy to understand, the most simple, right, the most proven overall. And for me, like what I found was that I have no advantage in multifamily, right? Like me going to compete with someone who has a full team buying deals, like I have no true advantage. And what I found was that a lot of the capital and investors became commoditized, right? So in turn, it's really tough to compete and differentiate in multifamily in a lot of ways. People do it and they do a great job of it. I wasn't able to do. So what I
Mm,
found was that let me go find other areas that have more ability for me to go compete at that I have some kind of advantage in, right? So right now, we've invested in every asset class you can think of in terms of hard assets. But now our focus really lies into three main areas, right? One being a debt type product, right? An offering that provides high liquidity, high cash flow, and allows for our capital partners, right, and fund managers to go make a meaningful spread. Because what we found is that in this space, I'm sure people listening to this call can relate to it, is that as a fund manager or even as an operator, you make a little bit of money up front and you hope at the end you make some money. But in turn, there's a massive gap in the middle. I think the debt fund market or income fund market comes into play in a huge way. If you can go make, say, 16, pay investors 12, that 4% can build yourself a salary pretty quickly in structure, right? Or in function. So I'd say one is debt fund, right? Two is a roll-up space in business. So right now we're working on paving companies, but I think we'll always have an offering like that in which we're going out and acquiring small businesses with the intention of acquiring enough scale of them where their valuations go up, right? For example, we can go acquire businesses in the 2x to 5x range of their EBITDA, and we can go sell them in the future likely at 6 to 8 to 9, right? If you get enough scale in terms of integrating back end systems. And then I'd say, lastly, it's more so investing into a small business with an operator, right? Where maybe only one or two investors into the deal, and you're owning a chunk of a business that you're just buying for, whether it be growth equity, you help them fund the down payment, and that's going to more of a long-term type hold in structure.
very cool. Let's take it one piece at a time.
Sure.
Regarding the debt piece of it, what types of debt is it for real estate that you're playing with?
Yes. So when looking at the debt fund, we're actually launching our own here, right? All of it's focused on small business lending. So actually launching this with a partner. They've been a big broker in the merchant cash advance space, so small business funding space, the last 10
Mm,
plus years. And in turn, they want to go keep the loans on their own paper versus brokering them out. So in structure, we'll look to go target investors of a 16% return paid monthly and allowing the fund manager to go pay investors 10, 11, 12, and make that spread between them. So all of it relates to lending on our end. And then for the investors, fund managers, be able to provide a really good yield.
I see. Very cool. Yeah, that's a really good space. I've met a couple people who does it that way. And in terms of protecting the downside, protecting the risk with it being a business loan, are you guys getting any kind of collateralization at all, or how do you protect the downside?
Yeah, so if you look at what we're doing, we're essentially buying discounted accounts receivable from the business.
Okay.
So for example, right, business doing $1 million of revenue, we're lending them 100K. So in turn, we would structure our payment period, we either paid every day or every week from their accounts payable coming in. So in looking at mitigation, we're getting payments usually within 48 hours to a week after we send them out money. So it allows us to kind of hedge our risk in that way. businesses have been around for usually decades, right? In structure, they need working capital, they need to go buy inventory, whatever it may be. But it's collateralized against the future accounts receivable. If the borrower ever defaults on that, it becomes a personal guarantee to them.